Hello everyone, welcome. My apologies for being a bit late. So, okay, 19 attendees so far. Audio works perfect. Screen looks fine. That's good. So we're good to go. So a bit of a how can I say that? A necessary, I will say, webinar on stops, because the majority, especially of the newbies, are not really using stops and they end up losing their money, unfortunately. So it's considered to be like a must. I mean, this webinar, I'm trying to do it every year because it's a must. Otherwise, you cannot really, without a stop, you cannot really uh, be safe. Okay, if I could say that word, safe. What I will, okay, let me know if there are any audio or visual issues. Okay, just stick it in the box. Webinars@hotforex.com is our email address as usual. Feel free to ask me anything you want. I have already uploaded the handout, so please download it. What else? What else? So that's it. So anything you need, just stick it in the box and I will be here to reply as soon as possible. So I need to go through the disclaimer warning. Thank you very much for the feedback, dear. Let me just, dear Daniel. So yeah, I need to go through the disclaimer warning as usual. So this material is provided as a general marketing communication for informational purposes only and does not constitute an independent investment research. Nothing in this communication content should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. Or a solicitation, all information provided is gathered from reputable sources, and any information containing indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leverage products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. Please read the full risk disclosure in our website. Skipping myself. And let's start. So why are stops needed? So what we're gonna cover today, guys, we're gonna cover obviously why stops needed and where to place your stop loss. It's the trickiest thing of all, right? It's tricky to identify targets, and it's even more difficult to place stop in an appropriate level in order to avoid being kicked out of the market. Also, ATR, we're going to see the indicator, which is very, very good. It could be very, very good on setting your stop. So you need to understand a bit how it works. It's a very straightforward indicator. I think Stuart presented how this indicator works several times. So I don't think that will be an issue. Also, be able to use advanced trailing stops in your trading, something that I love. Trading stops is just an easy busy. I mean, goes along with the trend, locks profits for you, so minimize your risk. I mean, it's something that it's very, very helpful. Also, how you could calculate position size professionally. So why I have put a recap of multi-time frame analysis? Because as I have said several times in the past, analyzing in a multi-time frame, first of all, gives you confidence, on the decision that you're going to take, gives you early signs in ahead of the time, okay? But also it helps you to identify possible entries or stop loss or targets, okay? So following a market in at least 2 time frames or resolutions, this is what we are referring to as multi-time frame analysis. By using the higher time frame, you can identify the dominant trend, and you might decide going down to a lower time frame and go along with the flow. So opening position in the direction of the trend, right? And it gives you also the opportunity to time your entry, how long the entry should remain open. Also, that you can achieve that by doing a top-down approach. So if you notice in my live analysis, I always start with the daily chart and then I move down to the 4-hour, 1-hour one, etc. It's because I want to be aware of what is the overall trend, or the overall outlook, if you prefer, of the asset. Okay? Because it helps me to focus on the dominant trend and trade with the prevailing momentum. It's good to have the trend as your friend, as we keep saying. So using first the longest time frame for identifying the trend and for identifying key strong support and resistance levels, and then you move down to the shortest time frame. Okay. Sorry, in the higher time frame, other than the major support and resistance levels and the direction of the trend, you can also use your pivot point analysis, identifying important pivot points as well. Or if you're not going to use the pivot point analysis, you can identify flipping points. So points that in the past we have seen strong resistance, strong support. So additional support and resistance levels if you prefer. And then you move down to the smaller time frames, trying to identify an entry signal where you should jump in the market. Okay, just very, very briefly, what I mean by pivot points. We have seen it in the past several times in different webinars every time. Is a turning point in the past, okay? So a pivot high is when the demand was greater than supply, so the market moved up, but that changed, and once the balance of supply and demand tips over the favor supply, we have seen a reversal and the price moved lower and we had this peak. Okay, you see, you can see it from the candles as well. Quite okay, not as strong, but bullish again with big body, so that implies to strong, but a bit of a dodgy one. So small body candle, big leg up. You have a question mark over here. Then on the next session, you're seeing a very strong bearish. So that is giving you a pivotal high. You can find these pivotal highs if you just apply your fractals. So again, it's something that I show in the past as well. We have a fractal indicator, guys. Stick it in, and the pivotal highs and pivotal lows will be automatically added regardless of which time frame you are. So now I'm in a weekly. So pivotal high number 1. So this is copper, by the way. Pivotal high back in March. Pivotal high back in October. Another pivotal high this year in January. So we have 3 key resistance levels. So you don't need to do actually the work. It's done for you. Okay. So this is explanation of how the pivotal highs is being formed, the fractal otherwise. If the middle of the candle of the 5 out of the 5 candles has the highest price of all 5, then a fractal would be formed, otherwise a pivot high. So the tops of the previous 2 and the tops of the next 2 candles, they need to be lower than the middle one. So you can either see a pivotal high, either if you are in an uptrend, either if you are in a consolidation, in a ranging market, either if you are in a down trend. Okay, pivotal highs and pivotal lows is something that you will see regardless of how your asset is moving. So, for example, oops, sorry. I was trying to analyze copper earlier, so that's why I have that. So you see, pivotal high number 1, pivotal high number 2, pivotal high number 3. If I connect them, it looks like it was in an uptrend back then. Okay, pivotal lows, pivotal low, another pivotal low over here. Okay, and so on and so forth. So I want you to understand how it works, but you don't need to do it manually. Okay, the fractal indicator is in your navigator, and where is it? Fractal. Sorry, where's my fractals? Under the Bill Williams folder, guys. Okay, easy busy. And why I am highlighting the people that high so that otherwise fractals, because they give you, without hassle a lot, they give you resistance levels. Resistance levels if you are in an uptrend or ranging market, and support levels if you are in a downtrend. Okay? No, sorry. Resistance levels either if you are in an uptrend, either if you are in a downtrend, either if you are in a consolidation, in a range. So sometimes you don't have to look. You don't have to struggle a lot to find resistance levels because we have the indicators. That's why we have the indicators. Okay? So let's move on. This is how pretty much a chart is formed. So as I mentioned, a pivot high will be seen with a fractal once we've seen a reversal and the middle candle has the highest price of all, and a pivot low will be presented once we have this middle out of the 5 candles, the middle one to have the lowest level of all. So you see, it might be that way, might be that way. So yeah, pivotal highs providing resistance. So resistance applies to a penetration, okay, that it will get back to support level. And the pivotal low implies potential support levels or stop levels as well, because they as well provide a sign of a rebound. Okay. Pivotal low. You, by the way, you can interrupt me anytime, okay? So, pivot low, easy busy. It could be automatically done by fractals. Is when we have the middle candle of out of the 5 to has the lowest price of all. So what that means, it means that this has been formed because we had supply greater than demand, so the price was moving lower, but at some point there was a balance of supply and demand, and then the demand was in favor, so we have seen a rebound, so we have seen the price moving higher, creating this pivot low. Once again, the head is on. Pivot low is created when the historical price point has at least one higher value, close or low, on both sides. So higher low, that's the lowest low of all. So you see, higher, I mean, it's in comparison. So here we have the lowest of all. So both the two next and the two previous have higher low than the middle one. So this is how a pivotal low is created, or otherwise a fractal low. So here is my chart. Here how a fractal low looks like, okay? And it's a sign of reversal. It's a sign of rebound, okay? And potential support and resistance levels that you might want to use either as targets, either as stop losses. Here is an example of a downtrend, okay? You can see that by connecting repeatable highs, we have a trend line. So every time that the asset touches a trend line or either post a fractal high, so a pivotal high, we know that it will revert down. It will drift lower. Every time, however, that we are having a pivotal low, like this two over here, we know that it will rebound with target at the trend line. Okay? So, recap. Uptrend. When price pulls back to a former daily pivot high, look to buy close to the level of this pivot. Look for intraday buy signals for timing your entry. So what I mean by that, let's get back to the uptrend. Come on. Okay, here we have the uptrend. So remember, in order to identify an uptrend, we need to connect the lows, right? At least 3 of them. Okay, so let's assume that we have found an uptrend. We have put our line on by connecting the lows. So how you can trade it? Simple as that, guys. You can enter long once you see a fractal low, a pivot low on your trend line. That will be a buying signal, okay? Cool. With targets, sorry, first of all, with entries on the breakout of past pivot highs and targets on the next pivot highs that you can see. So what I mean, let's assume that we have seen, okay, it was up, down, so this is now a resistance level, then again up and down, so that was another resistance level. So resistance level number 1, resistance level number 2, so it's down here. So we are waiting for a signal of a rebound right now. So the signal of the entry point, the long, the buying opportunity came as soon as we saw it reverting and breaking this line. So this line is my entry point, which I found by checking the past performance, the previous pivotal highs. So it came down, dodgy, bullish one, another bullish one, until eventually it broken this previous pivotal high, which was my immediate resistance area and my potential entry. So I have entered once this was broken. So I had to identify stop loss. I had to put on my stop loss and my target, right? So target is pretty easy, to be honest, because we have another pivotal high up here. So that could be our first target level. If you want more target levels, you can either go to a higher time frame and identify for more, or you can use your Fibonacci extension or your ATR. Now, stop loss. Stop loss could be you as a stop loss. We could use just um, a stop loss, just a level, few pips below the rebound, below the latest pivotal low. Okay, is it busy? Are you with me? So now in a downtrend, what we are doing in a downtrend, again, by identifying that there is a downtrend, by connecting at least 3 high levels, okay, 3 peaks, we are putting on this trend line. So what we're doing, we are trying to figure out, we are monitoring when the asset will touch again the trend line and will give a sign of reversal downwards. So once we see that, we could take a sell position. Okay, so for example, let's assume that one. Okay, so so we have seen it that it was getting closer and closer and closer to our trend line. And we're saying, okay, if it breaks, I want my MT4 to open a short position. If the asset turns down to this level, which was my previous support level, now it was my entry point, and I want asset target this pivot low and stop loss few pips above this latest pivot high. Okay, but again, as I mentioned, you can use also indicators such as ATR, Fibonacci extension, and etc. as potential target areas. Now, why stops are a must? I don't know how many times I'm gonna repeat that, but guys, by setting an appropriate stop loss, by saying appropriate, I'm not referring only to the technical analysis. You can literally go into our calculator website, say, okay, I want in this trade to risk only $10, $10. This is my entry, okay? How much it will be my stop loss? Where will be my stop loss in order to, if I lose only $10? Okay, this is what you have to do. There are calculators in the website, plenty that you can use them. And I'm going to show you soonish how you're going to use them. So this limits your risk, because if for any reason, either politics, like what happened with Russia and Ukraine, either from anything, if something happened and the market turns against you, you know that you will not lose much, because you have calculated in advance. You have set in advance your stop loss, your targets, and etc. So if you lose, you know how much you lose because you have set that limit. Also, investors are not using leverage, that are not using leverage, have the privilege of not using tight stops. But leverage positions, which are what the CFDs are, need special attention. Stops are there to prevent unnecessary large losses. Stops also are needed to manage risk with a business-like approach because, guys, not all of us are using some like that are very, very rich and they don't care if they lose and they're doing it for hobbies. No, I'm not like that personally, at least. And I believe the majority of you as well. We are risking our savings. Since we are risking our savings, we need to behave like business, like it is a business, because it is. We want to profit from it. We want to increase our savings, right? So we need to manage the risk. We need to treat it like a proper business. Like you were about to open a business, a store or something, and you are planning in advance what your expenses should be, or what your profit should be, how much tax you will pay, and etc. The same business-like approach you should have for trading. In order to make money, any business needs to have income that is greater than costs in order to run a business, right? So stop trades are part of the day-to-day cost of running your trading business. Make sure that cost stays small. That's why it's good to calculate in advance how much you might lose if you set the stop loss at that particular level. If there is no clear defined strategy for using stops, it's difficult to evaluate and develop your trading as a whole. I don't think I have to say anything else. I have presented several strategies in the past that you might want to test, but I'm always saying that whatever you want to try, whatever strategy you want to try it in a demo account first. And if it's proven good one, if you have improved it and it gives you good results, then go to a live account. Okay. Also, stop loss, as I said, is tricky. It's not that easy. Okay. You cannot have it too close, but you cannot have it too far away, because if you have it too close, it might stop out. I mean, eventually the asset to go on the direction that you want, but because of a bit of a volatility, it might kick the stop loss and your position might be close. Also, you cannot have the stop loss too far away, because this means that you will probably blow out your account. You don't want that, right? So if you put your stop loss far away, you might not be stopped out, but if the market turns against you, you're gonna probably lose a lot of money. So the risk is too high and the participation rate is too low. Okay, that's why we have the risk management strategies. That's why we have all these calculators. That's why we are using technical analysis in order to set a stop loss at the most appropriate levels. One indicator that is very straightforward and can help you for setting your stops is average true range, ATR otherwise. Why is that? ATR looks like that. Here it is. It's just a straight line that gives you number. This number is where your stop loss or your target should be. How many pips away? And also the good thing with ATR is that it could be applied in every single time frame. So okay, now I'm in a 1 hour chart. So it's 0.22, so to 19 points movement. If I go to the daily chart, so I'm a medium term trader, it suggests 95 points movement. And then so on and so forth. Okay. Oh, I was checking copper. Okay. Yeah. And by the way, there are a lot of ways to use ATR. You can use it as a whole, or you can use it partially. So what I mean, So just a bit of a briefing firstly, okay? Some background. So one indicator, one additional indicator that has been created by the very, very famous Wells Wilder. This guy was a genius. I don't know him. He provided us very many tools, and we are very I'm not glad. I mean, we appreciate this guy. He provided a lot of technical indicators that the whole world is using. All the indicators are using, or the traders are using. So this guy targeted. Actually, he was trying to find a tool to help him identifying support resistance levels or target and stop losses, but an indicator that will include the gaps as well in the calculation, not only the bar ranges, not only the candles, but also the gaps. The gaps are significant as well. Okay, so that's the difference of ATR from other what I was about to say. Yes, is the one of the few indicators that they can do that. So just very, very briefly, what it takes into consideration, how it's been calculated. Firstly, it's okay, the true range, before we go to the average true range, what we mean by true range is the value of the greatest out of these three. So what that indicator does, this indicator identifies the number if we deduct the current high minus the current low. Okay, so we are getting a number if we subtract the current low from the current high. Then it subtracts the previous close from the current high, and we have another number over there, an absolute value. And also it calculates the previous close minus the current low. So whatever the greatest of these three is the true range. So the greater, so if we have like 5 here, 6 here, and 7 here, the greatest is this 7. So it takes the number 7 because it's the greatest of these three. Yes, Emmanuel. Yes, give me a second to cover the mathematics behind it. So so if we have ATR with period 14, like in our MT4. The one that I use is the default one, in which the previous 14 periods are being considered. So is doing these calculations, okay, for every single of those 14 periods, previous 14 periods, okay, finds the true range, the greatest value for each of those periods, okay, sums them up and give me the average, okay? So the calculation of ATR uses the absolute values in order to avoid negative numbers, first of all. And it gives us the average out of them, okay? So why it uses absolute numbers? Because we don't care. The ATR doesn't give us direction of the trend. It gives us distance. So it literally saying to us that, okay, this is copper weekly chart. In the weekly basis, it is expected to move, let's see, around 20 points. So if that will be to the upside or to the downside, Who knows? You need to figure it out with different analysis. But what it's saying is just how much it will move. That's it. But by being aware, as I said, of this number, by checking the ATR, you are aware. You know that if you want to jump in the market, you can use this as target level or stop loss level. Okay, and I will show how you do it. Just give me a second. Okay, this is the calculation. Okay, obviously, guys, if you are in a very short time frame, such as 13 minutes chart, okay, don't use the default setting. Don't use the 14 period. If you're in a 14 minutes chart or lower, you need a faster ATR number. So probably you should try either the 5 or the 7. Just check which is give you like reasonable levels and etc. So as I said, one way to do it is using a percentage of the ATR. So this is an example, pretty old one, but it's my slides, so I cannot really update them every single time. It's just to make you understand. So here we are. We were in a euro dollar currency. We have our several indicators. So one of them was ATR as well. Okay, so our asset was consolidating for a long time, consolidating. It peaked at 124.60, reverted again, and that was our immediate resistance level until it was finally broken. So that was a buying signal. Okay. If, however, we have missed this signal, a second buying signal came with the breakout of the previous resistance, the previous pivotal high over here. So that was another possible entry. So let's assume that we have seen this and we have entered at 124.80. So that is our entry level. So where we should set our target and where we should set our stop loss. One way of doing it is sorry. So at that current price, at that current moment, at that moment where we have that breakout, so we enter the market long, okay, that very moment, the ATR was presenting in the daily chart. Now we are in a 15-minute chart, okay? In the daily chart, it was presenting 100 pips movement, okay? 100 pips movement. So that means that a potential target 100 pips higher, okay? But that's that's too far away, right? For a 15 minutes chart, right? So since the daily ATR is presenting 100 pips, what you can do is either use a part of the daily ATR or use your what your ATR is suggesting in the 15-minute chart. Okay, in this situation, I have used the 50%, the 20% of the daily ATR. So the 20% of the daily ATR suggests how much is it? Is 20 pips, right? So my target to be my targets to be my very first target to be 20 pips higher. So my stop loss will be 20 pips lower. Okay, so stop loss 20 pips lower, right? Also, that's good because it was our previous resistance level. So now it has been turned into a support level. So that coincides. So that's a good point. And we can use as target the multiples of this level. So 20 pips higher the target number 1, another 20 pips higher the target number 2, another pips higher the target number 3. Or we can use a single target, 60 pips higher. Why? Depends on your risk and reward ratio. In this condition, this kind of target at that point over here, and we stop loss 20 pips lower, this implies a person that has as a risk and reward ratio 3:1. So he wants to gain 3 times more of what is risky. So, confusing. Okay, Michael, let's take it step by step. Okay, are you okay with how we had identified our entry point? Please reply to that. Yes, okay, so you are okay with the entry point. Okay, so there are 2 ways of doing it. You can either check your ATR on that 15-minute chart and set your stop loss at the level that the ATR is suggesting to you, or if you are you want to open a position in a longer time frame, you need to go up to the daily chart and see what the daily ATR is presenting. So in this case, the daily ATR was suggesting 100 pips move. So what we're doing, going back, we have taken our entry, so we need to set our stop loss and our target level, right? But we have determined in advance. It's something that you should always do, guys. It's something that you should have by default. You need to ask yourself, how much I want to gain per trade. If you have a risk and reward 3:1, I mean, you want to gain 3 times more of what you're risking, okay? then you need to make sure that the target level should be 3 times higher than your stop loss. Okay. Oof, 1 minute. I've never tried that. Let's see. Okay, but let's leave it for so. Something that you should do before start trading in your lives, guys, is decide the risk and reward. 2:1 is okay. 3:1 is okay. I believe more than that is a bit risky, but it's on your call. Okay. So in this case, I decided that I am a 3:1 risk and reward ratio. So I want to gain 3 times more of what I'm risking. Okay. So I have taken my entry. Okay. And I checked my ATR. My ATR in the daily chart was suggesting 100 pips move. And I was like, okay, obviously, 100 pips move is a bit too far away. So I decided to use the 60%. Actually, not the 60%. I decided to if the daily chart is presenting the 100 pips move, I decided to use only the 20%. That's on your call, by the way. So 20% move means 20 pips. Okay. So I have set my target, my stop loss, 20 pips lower. So that implies over here. And why I did that, why I used the 20%, simply because it was also the previous resistance level. So it looked to me a good support level. Okay, so since I use the 20% of the daily ATR only, and since my risk and reward ratio is 3 to 1, then in order to profit triple of what I'm risking, I need to put my target 60 pips higher. That's it. But that's just an example. Each one of you is using different risk and reward ratio, guys. Okay. Okay. We're gonna see several ways of using the ATR. It's not solely that. You don't solely need to use 20% of the daily ATR. You can just check your 15-minute ATR. Okay. Your 15 minutes ATR and see what is presenting. So 15 minutes ATR. Okay, I'm over here, right? It's over here. 140.64 is for the time being. My ATR is saying 12 points movement. I can see that there is a kind of a decline. Okay, so if I'm using a target at 12, like ATR is presenting, is showing to me. So 4.6440 minus 0.0, let me do the maths. 4.6440 minus 0.023 is 12 with 463. So my target should be 63 here. So this is the distance that my ATR in the 15-minute chart presents. But where shall I set my stop loss in order to have at least a double profit of what I'm risking? So my profit will be the 50% of the ATR. So the 50% of the ATR is 6 points higher. So that means 464. 464, come on. 464.40 minus 0.065, then 63.7. Oh, what have I done? Plus it should be 464.40 plus 0.065. That means 465 will be my stop loss if my asset breaks this 464 low, which also coincides with my 20-period moving average. So if it breaks it, my target is 12 points lower and my stop loss 6 points higher. So ATR, I'm using the ATR as my target level and the half of ATR as my stop loss. But you might say, Andrea, that looks too tight, too close. And I will agree with you, because the best way to do it is use multiple times the ATR. So what I mean, so it would be preferable. Okay, entry point is that one. Okay, 20-period moving average, latency low, etc. So ATR is, we are in the 15 minutes. ATR is saying 12 points, right? So let's assume that I have a risk and reward ratio 3 to 1. I want to gain 3 times more of what I'm risking. So 0.0123, which is my ATR, multiplied by 3, that means 36 points target. So that will be around okay, not big. Come on. That means that my target should be at here. Actually 70, 67, somewhere here. And my stop loss 12 pips higher. So that means 464, 464 plus 0.023, that will be 65, 60, somewhere. 60, here we are. Okay, so if the asset breaks that level, then target will be down here and stop loss right here. Okay? Are you with me? It's not that okay for a fast moving average, for a very fast environment, it's a bit tricky, but you can detect your ATR, okay? And you need to be a bit fast as well. So let's see. Let's see how it will work. So on this breakout over here, the ATR was saying around 26 pips movement. Is that happening? Did it? Didn't. So you see that, you see, it means that you have to detect even more the ATR numbers. So because you need to make sure if you're using 1 minute chart, 3 minutes, 5 minutes chart, 15 minute chart, you need to detect and make sure that it gives you appropriate levels and not too far away levels. Okay, so 27, indeed it went further down and it went down around 0.12, 0.12, 0.12, and that was okay. That was okay. That's good. So yeah, you need to detect your ATR, guys, because for assume, let's assume that I have noticed this breakout of 20 day. This is 1 minute chart. Okay, be very, very careful. This is 1 minute chart, a very fast environment. Let's assume that I was that lucky and I noticed that this candle closed below my 20 period moving average. And not only that, but also we had a bearish cross of 5 below a 9 exponential moving average. So I checked my ATR and my NTR was saying around 17 pips movement. So 17 pips movement, okay? That means, let's do the maths, 4.6564 minus 0.017, that's down to 0.6547. 6547. So 47, that's too tight. So we need to use multi-time. Let me know, Michael, what risk and reward you want? Double, triple, 4 times? How much do you want? So I could do the example. 3 to 1. Okay, so it means that back then it was saying 27, so no point not to multiply by 3, it means 81 pips. So my target should be down to 64.80. 64.80. So 64.83 to be very precise. Here is the target. So 3 times the ATR, that's the target. And if we put the stop loss exactly on how much the ATR is presenting, that means 64.65 minus 0.017, that should be 65. 47. Come on. 60. So have I done the correct maths? 465, 64 plus 0.0081, 464, 466.45. Oh my God. And that should be somewhere here. Let me measure it, whether I said it correctly. Even higher. Let me do the maths, guys. Sorry. 464 plus, how much was it? Sorry, plus 0.027, that means 65.90, 65.90, 90. That's it. So stop loss, target, and indeed after nearly 3 minutes, it hit my target and I wasn't stop out. But guys, sorry. Okay, my who asked for a minute? It was Agustin. Agustin, okay. If you are a minute trader, fair enough. But you see, you need to be extremely fast. Okay, and obviously you need to detect your settings, okay, to make sure that they give you appropriate levels. So I had, for example, for copper over here, I had to detect to 3, a period of 3. So be a bit careful, guys. For a minute chart, you need to be extremely fast, and you need to set in advance an ATR that is appropriate for a 1 minute 1 minute chart. Okay. No, ATR doesn't show direction. It shows only how many pips it will move, either to the upside, either to the downside. Okay? So you need to identify the direction with a different analysis. For example, over here, it was a bit obvious to me because it was in a decline. I had a pivot high. It crossed the 20 period moving average, and I had a bearish cross of fast moving averages. So I had a lot of signals that it was about to detect even further. And let's not forget that was a big body as well. So right now, for example, I was about to jump in the market right now, probably I wouldn't take the entry. Why? Because it's consolidating. Can you see? It's consolidating so I have 3 repeatable fractals over here. Okay, 3 repeatable fractals. Ooh, just broke. Oh, that could be an entry. That could be an entry. So, not 23. No point, not 23. Bullish cross above 20. So you need to be extremely fast. So no point not 23 multiplied by 3. My target should be at 6650. 6650 target 6650, and my come on, be fast. 80. Come on, 465. 80 minus 0.03, and my stop loss should be at 65.57 here. So stop loss target, because it's for a second period above 20 moving average. It broke in this triple fractal, and I have a bullish cross. Okay, this is the last example that I'm presenting for copper. Are you okay, guys? Can't believe that I'm in a minute chart. Present. Cool. Okay. Okay, I'm not gonna wait until to see what happened. I will get back to see whether we were successful or not. But let's move on with our candles, and I will get back just out of curiosity. So, and let's put a line as well when we enter. Oh, we have a line. Okay, perfect. Oh, it's returning. Let's see. So never mind. Also, you can combine multi-time frame analysis, as we said. Go up, check what's the trend, find in your daily or 50. If you're in a minute chart, obviously you're gonna go to the 15-minute chart to see, to identify pivot highs, pivot lows, to identify trend, and etc. So you need to combine multi-time frame analysis, or at least it's good to combine multi-time frame analysis. Okay, so look for a price move to and multi-time for support or resistance. Wait for the momentum reversal signal, okay, or any signal like that one. The cross, for example, over here, it was a nice signal because we had 2 bullish candles, bullish cross of fast moving averages, and a breakout of 3 triple fractals. Okay, so try to confirm a bullish or bearish signal or a momentum signal, and place the stop behind the signal bar. And if you check my example, you can see that it's far away from my entry point. And actually is when I got when I have when it's below the time that I had my confirmation. So try to, okay, in this case, in the example that we have just presented, we don't have a rebound or something, okay? We have a rebound down here. So if you're not gonna use ATR, if you're not gonna use ATR as your stop loss, you will use it only for target levels. An alternative stop loss will be and it kicked. Oh, that's great. I'm so happy that this happened because you managed to see that we actually hit a target. That's brilliant. I like when this is happening. Yes, okay. No, it's not the same thing, Michael. Fibonacci extension are not the same as ATR, but it's upon your discretion whether you're gonna use Fibonacci extensions or not. I'm just presenting one way. You don't have to follow me, guys, okay? It's one way. Use only what makes sense to you, okay? So, for example, if you want to use as a target your 3 times your ATR, good. But if you don't want to use ATR as stop loss and you prefer to put your stop loss slightly behind your reversal point, that's good as well. So if you say, okay, I had a rebound over here, doji candle down fractal, I prefer to put my stop loss here. That's fair enough. That's up to you. Now, if you want to use Fibonacci extension, okay. Okay, so you will have using the Fibonacci extension, you will have used as targets, I assume, these two levels. Again, you are the one that you gonna build your strategy. We are just presenting different approaches, demonstrating how you can do it, and it's up on your discretion to decide what you like to include and what you don't like to include. But try to keep it a bit simple, dear Michael, okay? You cannot really use and Fibonacci extension and reversal signal as stop loss and ATR. Build it the way you want, but try to be a bit simple, okay? A bit simple. So, so you can, if you go for the people that they like ATR and they're using ATR for setting their stop loss and their targets, you can either consider using, if you have a short trade, use the ATR or a part of your ATR um, um, with by detecting the entry point, which is the signal bar, minus the ATR or the partial ATR. And if you are in a long position, is a you are using as a stop loss, you have to sum the level of your entry plus the ATR in order to set your stop loss. It's what I did earlier. So over here, I said, okay, this is a nice entry point. So ATR is at that point it was 0.020. So my entry point minus 20, that means that stop loss will be over here. Then my target is 3 times higher, so 20 points multiplied by 360. So entry point plus 60, then it takes me up here, and etc. This is how I do it. So let's move on. Oh shit, it's already 2 o'clock. That's another way of doing it. This is an example in a 4-hour chart. Sorry, in a 5-minute chart. So entry was at um, firstly we started with the higher time frames. So with the 4-hour chart, we saw that there is a downtrend overall. Then we went down to the 1-hour chart to identify any resistance and support levels, just for that. So setting our support and resistance levels. Sorry. And then since we found our support and resistance levels, we have found the direction of the overall trend. We were a bit patient until we saw that one of the support levels that we found was broken, and I'm referring to 1.2032. So that was eventually broken. Okay, so I went even further down to the 5-minute to see what is going on, where the momentum is. So in the 5-minute, what I saw is a very big bearish candle. In the next 5 minutes, another bearish candle with the Bollingers pointing down, so the momentum is negative. Stochastic is also turning down, so that was another indication that momentum is negative. So why I did that? I wanted to see the overall picture, but the short-term picture as well. So since the price broken, sorry, so since the price broken this support level and extended lower, okay, I was trying to identify my my entry point and my potential stop loss and target areas. So another way to do it, since you confirm that the intraday, the very short time frame momentum is still negative, there is a downtrend, which you can see in the 5-minute chart, in the 1-hour chart, in the 4-hour chart, etc. And you can see with your indicator that the momentum is slowing down, so there is a negative momentum. You have the confidence that indeed it will continue further lower, so I should find an entry point and enter short. So what you can do, you can enter short, right? As soon as, since you missed this entry, right? You need to be patient to wait the next opportunity. So we have seen it drifting down, rebounding, posting another pivotal high. And what we said about pivotal high, guys? If we are in a downtrend, a pivotal high is a reversal signal. It's a bearish signal. So as soon as we saw this happening and turning down, that could have been our entry level. Okay, on the reversal down, we could enter, okay, and use as stop loss. So ATR, by the way, is at, let me just see whether it presented in the next slide. So yeah, we took the entry over here at 120.25 when we notice this reversal, right? This pivotal high. So we enter short. We saw that in the 1-hour ATR, the 1-hour ATR suggests 8 pips. So what we are doing, right? Have in mind that our previous support level now has turned into resistance level. Okay, so we could Sorry. Let me clear a bit this mess because it will get confusing. So our entry was at 120.25 after we have seen this pivotal high. Also, our ATR was saying 8 pips. So 8 pips above the pivotal high, that implies to 120.40. Okay, that is our stop loss. This is a different approach or a repeat. In this case, I have used as stop loss the level that is above my pivotal high, my immediate resistance area. So this is the immediate resistance area plus the ATR. It takes us up to 120.40. You don't necessarily need to do that. You can use the previous approach that we have used, setting your stop loss just 8 pips above the entry. But I'm presenting different ways so you can test and figure out which one is better for you guys. Okay. So in this case, I use a stop loss the pivotal high plus ATR. So my entry is with green. My pivotal high is at 120.32 plus the ATR. It goes up to 120.40. That's my stop loss. The distance from the entry point to the stop loss is 15 pips distance. So having in mind that my stop loss is 15 pips above my entry point, and I have 3-to-1 risk and reward, that means that I have to set my target 3 times higher. So 3 times 15 is 45 pips. So that means that I need to put my target 45 pips below the entry. So that takes us down to 119.80. Okay? This is one way to do it, okay? One way. There is another way. You can say, okay, I have entered 120.25. I'm not going to use ATR as a stop loss. I'm going to use only the pivotal high, which is at 120.32. So let me measure this distance. This distance is just 7 pips distance. Okay, 3 times 7 is 21. So it means that I will set my target at 120.04. Okay, so somewhere 120.04, 120.04, so that will be somewhere here. Oops, somewhere here, I think. Okay, up to you, whatever makes sense to you. Trailing stops. Okay, I'm gonna do it very, very fast because we run out of time. I show you how you can set your stop loss, but if you don't want to have a fixed stop and you prefer to lock profits, okay, you can use a trailing stop. And what do I mean by that? A trailing stop moves along with the trend. Okay, so I'm gonna skip a bit this, guys. Okay, I'm gonna go straight to an example. Let's assume, okay, here we have okay, we are in a we have initially used 1 hour chart to identify pivotal highs and pivotal lows, okay, and we have seen this pivot low at 118.81, okay, and this pivot low, yeah, and then we identify that we are in a downtrend and etc. So okay, we identify from the 1 hour chart some support and resistance levels, some pivot highs, pivot lows, and then we went down to the 5-minute chart because we like trading a 5-minute chart. Okay, we went down to the 5-minute chart, and we have sorry, I'm running out of steam. And we have noticed this fractal high over here, which is also a shooting star. So that's our very, very first bearish signal. Okay, we saw that. We understood that the asset might start turning lower. And after that, we also seen breaking this support level that we have identified in the 1-hour chart. It was broken, okay, and it posted a pivot low. Okay, then it went up, retested this level, and provided a pivotal high. So you can, if you have seen this, you were searching for a short position. A possible short position could have been be this one. So it's turning down, detecting until it managed to break the previous pivotal low. So that could be a potential entry level. With stop loss, okay, either at the previous pivotal high, okay, either by using your ATR. Your ATR at that point was at, not in the 5-minute chart, in the 1-hour chart was 23 pips. Okay, it was at 23 pips. Okay, let's measure. My entry, the entry from my pivotal high is around, how many pips? Let's see. It's around, come on, 20 pips. It's around 20 pips. 20, come on. It's around 20 pips. Okay, so okay, pretty close to the actually agrees with the 1-hour ATR. So okay, that's good. Let's use that distance then. Okay, let's use the ATR as our stop loss, because it's the same with my pivotal high. So that's my entry, that's my stop loss. So I have risk and reward ratio 3-1. So I need to have my targets 3 times more than my ATR. So that means that my target should be, come on, 118. 118. My entry was at 118.60 minus 0.60 at 118. Where is the 118, guys? It's down here. So that is your target. Okay, that's your target. If you have one target, you can also, okay, so that's your target. 3 times more than your stop loss, right? Okay, so you're thinking, oh, it looks too far away. What shall I do? What shall I do? What you should do in order to lock profits is, instead of using a fixed stop, is to use a trailing stop loss. So instead of a fixed loss, set your, so what's this distance? What's the distance between entry and stop loss according to ATR or according to your pivotal high? What's the distance, guys? I already mentioned that. Oh, hello, come on. Come on, how many pips? How many pips? Okay, it's 20 pips. So set your trailing stops 20 pips higher. With this way, every time that your asset is moving down, the trailing stop will also move down along with the trend, and will always keep a distance at 20 pips higher. With this way, even if your target is not hit, you have already locked profits up to here. You have already locked all these profits because you had a trailing stop that was moving along with the trend. So you were locking and locking and locking profits. Is that okay? How you are setting a stop loss. Let's assume that I am opening a position, okay, buying, okay. This is just to show you guys, okay? So how you will set your position. Over here on your entry, you right click stop loss. Okay, here are some default points, but you can custom, and then you say I want my stop loss to be 20 points away from my entry point. Okay, for copper the minimum is 30, but for the forex industry is not, so don't worry. It's because we're in copper and that's why it's a bit fixed. So have I said it? No. Sorry. And trailing stop. Okay, and da, 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 da. How have I modified it? And my target will be at, come on, okay, at 4. Just I'm putting it very randomly, okay? And I want it to be at 464 and buying, okay. What have I done over here? That's close, so okay. So trailing stop 30 points. So yeah, I have amended and I have put a stop loss at a fixed level will always be 30 points below my how are we saying it? Below my, come on, my price. Okay, so this is how you can do it. Okay, yeah, just modify trailing stop and you set your trailing spot. So and this is pretty much it. Okay. What else? What else I wanted to say about trailing stops? This is just a calculation of the risk constant. It's good to decide in advance how much you want to risk per trade from your total amount for your total account. So if you want to use for every trade that you're trading, just the 1% or the 0.5% of your whole money, you need to set it in advance. Okay, this will help you limit your risk. If you have 10,000, don't risk more than 2% for every trade that you're trading. Also, by identifying how many pips different you have from the entry price to the stop loss, along with the risk constants, it gives you how big the position should be, the size of the position. We have a calculator for that, so don't worry about it. It's, where is it? Here, risk percentage. So you are putting out the currency pair, you are putting the direction, the open price, the stop loss, what's the balance of your account, how much you want to risk, and it will give you what should be your position size in order not to lose more than the 2% of your account if the asset turns against you. So I want you to very careful check these slides because I don't have the time. We are running out of time. Okay, we are running out of time. But I have examples You see, I have an example over here as well. I've taken a short entry. I have put my stop loss above my pivot high, so that's a total of 15 pips. I decided that I want to risk only 2% of my account for this trade, okay? So that means 1.33 standard lots position size, okay? So that I have identified that by just using my risk percentage calculator. Calculator is on the website. Feel free to use it. Okay, so it's not a matter only where you will set your stop loss, where you will set your targets and your entry level, and what's the risk and reward ratio. Also is how much the position size should be in order not to lose more of the money that you want to risk. If you want to risk only $50, that's fine. That's fine. That's up to you. Then over here, fine. What's the percentage? What is the percentage if I want to risk only $50? So $50 out of 10,000, that means a 0.005. So that means a 0.5% risk. So put over here 0.5. Calculate and it will give you how much the position size should be. So when you open the position, okay, when you open the position, buy, okay, you know what should be your position size, okay, 0.05. Sorry, and it depends on how the risk calculator, or you can manually do it. Okay, here it is. So according to the calculations that you have done. Guys, I'm sorry I didn't have the time to go through all the slides, but they are there. You can check them. If you have any a question, let me know. Send me an email at webinars@hotforex.com and I will reply as soon as possible. Okay, so mom, in the risk calculator, some pairs are not found there. You are actually right. Let me check something, my dear Michael. So, hot forex. Calculators. Come on. Where's my calculator? Yes, we have only the majors. We have plenty, but we don't have all. What you can do, Um, you can click on the position size. Let me see what you can find over here. Over here you can have others as well. And yes, use the position size, okay, calculator, dear Michael. Over there are commodities, there are bonds, there are stock DMAs, there are ETFs, cryptocurrencies. So use also position size calculator. If the risk calculator doesn't have the type that you want, the symbol that you want, okay? Okay, guys, I need to go. Thank you very much for attending. If you're facing any problem, please send me an email at webinars@hotforex.com and I will come back to you in 24 hours, okay? Thank you very much. Have a great day ahead and take care. Risk management, especially now that we have Russia and Ukraine, especially now, because there is a lot of volatility in the market. Thank you very much. Have a great day ahead. See you again later. Bye-bye.